Welcome. Thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for an ROI payout, but no trade recommendations. It's just my trade journal. And here we are, June 14th, FOMC day, high impact news catalyst. So it's all about the interest rates, 2 p.m. Eastern Standard. That's part one. And then Chairman Powell, part two, is at 2:30. So risk mitigation trade plan, prop account, ball out time stop. I don't like trading afternoons with prop account at all, whether it's an eval or a funded account, no matter, it's the same plan. I just don't like afternoon trading, strictly Globex and AM sessions only. Cash account, scout team only, and that's just to reduce size, and I really don't want to have a lot at risk. I'd rather bypass mostly all the action and keep my capital and trade the day after FOMC with size. So let's get to the charts. We're going to go from higher to lower, see where we're at, and check the levels. Okay, we'll go with the 24-hour chart. Here we are on the right with the candle here, and this is, of course, Wednesday, Globex, and prior day we had CPI, and you can see where we opened, which was 402.5, and what it left behind yesterday was the Monday, Tuesday had a volume imbalance. So note this yellow rectangle. I'm not saying we're going to go back and reprice that, but it's just something to note that we've got that gap. So where am I right now? We're looking at the high so far for FOMC day in Globex at 44.28 roughly. And below this here, we have this line I want to note that is coming in with the low of CPI day Tuesday, 43.82 or 43.81 and change. And that had a fair value gap that never got repriced on the 1 hour. So that kind of covers the 24-hour. Let's go to the next chart. So on the left here, these are 3 1-hour charts. On the far left, we have the NASDAQ. So you can see we are retracing lower. In the middle, the S&P 500 is retracing a little bit more deeper. So this big green candle, this is London. Again, the London has equities up, and then we've retraced into this 15-minute fair value gap. We've repriced into the consequent encroachment right in the middle, but we've not really covered the whole gap. And on the right, you've got the dollar. So dollars down here, we hit 103.10, and looks like we're going to bounce lower dollar. It's going to mean rally on stocks. And let's just see if we can get back to 103.4. And if that happens, we'll see. But it's all about interest rates. So again, I'm going to be mainly in watch mode. Let's go to the next chart. 32nd on the far left on the S&P. So again, I'm just watching how price is either disrespecting or respecting this 15-minute fair value gap on the middle chart. That's the 15-minute time frame. And so you can see here we've dipped into that red line middle, 44.21, but we're really not pressuring anything to cover below on the bottom of 1975 and below that new day open gap, and below that we had the London open and the New York midnight above that. Price is staying front run, and we have a 15 handle range so far in Globex, and then the 1 hour, which we already covered on the far right here. Let's go to the Renko. Okay, this is the Renko. I'm going to keep my eyes on this real closely because it's all about the upper Renko. If we do make a breakaway gap above after the part one and part two FOMC decision and Powell speech today, I want to see the duration and how long if we do get up here. So currently the upper blue Keltner is 43.38 and the middle red 44.1475. And as you can see, the order flow deltas here, there's no red. There's no red in the bars. The HAMA's totally green. The day one VWAP is 44.20. So there's no down here. We could drift up and we're still below this. So I want to play the edges. We're not at an edge. We're farther away from the red, but not far enough for me to be interested in doing anything at this point. So that kind of wraps the video here. Again, FOMC day, less is more, especially when we've got major interest rate announcement, very high impact. If they pause or if they go ahead, is not as important as the market's reaction, both in the bond market and the equity markets. Thanks so much for watching. Take care. Aloha. Bye.